Last week, the S&P 500 and stock market did a pump and dump. A lot of market participants were surprised by the Thursday dump. But for those of you that have been following me and been watching my video, you probably saw it coming. And for those that didn't, in this S&P 500 analysis, I will show you what gave us the clue to be prepared for last Thursday's dump. So next time you'll be able to see it coming. In this video, we're going to analyze the S&P 500 using technical analysis and review the stock market sentiment and its internals to see what the market is telling us now. And before the end of the video, we will analyze the S&P 500 ETF, the SPDR, to determine what the price action might do in the coming week, so you won't be surprised or miss out on any trade opportunity in the coming week. Now from this index chart here, we can see that the Nasdaq 100 and the Nasdaq Composite made an all-time high on Thursday. And looking at the other indexes, you can see that the New York Stock Exchange Composite, the Dow Jones Transportation, the Dow Jones Industrial, the S&P 500, and the Russell 2000 did not close with a new all-time high. And more importantly, they all closed with a loss for that particular day. So one begs to ask the question, what is wrong with this picture and how could that be? I will discuss this further later to answer those questions. But before I do that, let's take a look at the S&P 500 price action first. As you can see from this weekly price chart of the S&P 500, the price is still well within this long-term megaphone channel that started back in the March 2009 low. And last week, the range have expanded to a little bit over 248 points. And for the week, the S&P 500 lost a little bit over 152 points or 4.78%. And it is currently up 849 points from the March low, or equivalent to 38.75%. And it is still a little bit more than 10% below the February all-time high, or 352 points away from it. And you can see that it also printed a engulfing candle last week, and it is a bearish engulfing candle. The high of last week took out the previous week high, and also the low, last week's low took out the previous week low. And the close is lower than the open, so that is a bearish outside bar or a bearish engulfing candle. Now looking at the 10-week moving average and also the 40-week moving average, it is still pointing up and the price is still above those two moving averages. So in the long term, the trend still remain on the uptrend. And looking at the daily price chart of the S&P 500, you can see on Monday, the S&P 500 actually started the week quite strong and had a nice update. Then on Tuesday and Wednesday, it started to weakening, and then on Thursday, we have that big dump. Now, a lot of people was attributing to this sell-off due to the gloomy projection from the Fed after the Fed had finished with the FOMC meeting. Fed Chairman Powell indicated that the Fed is still expecting the unemployment rate to be somewhere around 2021, and it does not anticipate to lower the interest rate anytime soon, and they're going to hold this low interest rate until at least to 2022. So the projection from the Fed, it sounds a little bit gloomy, and it does not anticipate the recovery from the COVID-19 shutdown to recover quickly. And that, I think, caught a lot of the market participants by surprise, because the market was pricing in for a V-shape of recovery. And right now seems to having a little bit of a reality check. So before we analyze the S&P 500 price action in more detail, let's go and take a look at the market sentiment and its internal and see what they are telling us and see what clues we might get from these indicators on the potential direction of the stock market for the near term. So in this sentiment chart here, we see that the VIX is actually start creeping up and is shot above the 30 level and went as high as into the 40 on Thursday, then it kind of pulled back a little bit, still remain relatively high at 36.09 as a close of the week. And you see the put-call ratio actually got really bullish. And then on Thursday, it got pretty bearish, and it went up to somewhere around 0.92 before it pulled back a little bit on Friday to close out the week at 0.88. So right now, with these two sentiment indicator, it is telling us that the risk is on the upside, and there are still a lot of fear in the market with the VIX is sitting up above 36, and the put-call ratio is near the 1 mark. So definitely the risk is on the upside, and most of the market participants are still being fearful, and a lot of protection is being bought to hedge against potential stock market pullback. Looking at the New York Stock Exchange new high, new low, not much change except it didn't do too much last week. And looking at the New York Stock Exchange cumulative AD, the AD line is pretty much in sync with the direction of the S&P 500, so there's no divergence to observe at this particular time. Now, looking at the Nasdaq new high, new low, you can see that even though it expanded a little bit on the Wednesday when the Nasdaq 100 made a new all-time closing high, and then it just contracted down to the 16 level on the two sell-off day, the two last day of the week. And right now, we basically did not see the expansion of the new high, new low as the Nasdaq is making a new high. And we've been saying that this is the key market internal to watch as the market is moving toward the all-time high. And here's what we pointed out from last week's video. Now, the new high, new low in the Nasdaq is still pretty relatively low level as the Nasdaq 100 printed a new closing high last week, which is not good. We do need to see an expansion to start occurring in the new high, new low in the Nasdaq if the index is to continue to push into a newer high territory. Otherwise, we'd be cautious about this pivot high here that could signify some sort of reversal. Here's the Nasdaq cumulative AD line. See on Wednesday when it made a new all-time high, you can see that the advanced decline is actually lower than the previous level here, lower level on the Nasdaq 100. And that kind of gives us a red flag. The market is making a new all-time high with much less participant pushing the index up. So on Wednesday afternoon, I tweeted on Twitter about how weak the market really is while the Nasdaq closed at a new high. And here's the tweet that I posted on my Twitter stream on Wednesday afternoon, and saying that the only thing that is green on this panel here is the Nasdaq 100 E-mini futures, and the Uptown volume is negative, the advanced decline is negative, and also the cumulative tick is also negative. So that kind of gives some clue that how weak the market was during the time when the Nasdaq 100 and the Nasdaq Composite was closing at a new all-time high. And also I posted this tweet on my Twitter stream saying that the Apple stock has basically been pushing the index up, and I'm saying that Apple could not hold this forever. And you can see that here's the divergence of the Nasdaq 100 as the index is pushing to new high, and the AD line is coming down. So you can see that negative divergence, and I'm saying that, hey, this divergence got to get resolved, and my bet is the Nasdaq 100 will come down to get back in sync with the advanced decline. Now let's go take a look at the S&P 500 price action in a little bit more detail and see what we might expect for the coming week. Let's look at what we put forth as a possible downside scenario from the last week's video. And on the downside is that if we come down and chop around on this zone and unable to find support, then we'd be looking to see would it be able to come down to this trend line and possibly find support in the trend line. If that is unable to provide some support, then once again, we're going to look for this level here, the 618, somewhere around the 2933 will turn out to be. And as you can see, we did not get the upside scenario. Instead, we got close to a downside scenario. It pushes up on Monday to give us the pump. And on Tuesday and Wednesday, sort of weakening a little bit. And then on Thursday, it got dumped. And it came down to this trend line and found low support. And on Friday, it kind of popped back in. So both of these 2 days actually close above this trend line. So for next week's upside scenario, we'd be watching to see would it be able to hold the support of this trend line and come back up and fill this gap here and try to get back above the 32.14 area. Then on the downside, we'll see if it break the trend line support. Then we probably be looking for it to pull back to the 618, somewhere around this 2933 level. And if it doesn't hold this level, then we're basically looking for it to work its way down to this 50% retracement level, somewhere around 2791 or the round number 2800. So now let's go and analyze the S&P 500 ETF, the SPY, and see what are some of the levels to watch in the coming week. This week I have reverted back to a daily chart here because the time frame is getting longer now, and also some of the candle is also getting a little wider. Now I have changed the color of this trend line here to blue, and that was the original trend line that we're watching. And right now, with a couple of these new candle, and it seems like this trend line a little bit more suitable for these touches here. So we be still monitoring these two supporting trend line for potential support. So again, looking for the potential upside is we're going to see would it be able to come back up into this 313 area and get into this 321.24 essentially to fill this gap by holding the support on this trend line here. But if it could not hold a support of this trend line, then we expect it to come back down and test this 297.97 to see would it be able to get a little bit of support. If it's not, then we're essentially looking at this 294.88. And if it doesn't provide support, then we be looking down at somewhere around this VPOC, the composite point of control here, volume point of control, around 282.40. So that's basically what we're looking for on the potential downside. So in summary, the last week pump and dump erased 7 days of gain by a single day sell-off on Thursday on this by this candle. They basically wipe out all this gain up here. And we were warned by the market internals, specifically the divergence between the cumulative advanced decline and the Nasdaq 100 as the index made new high. And this is the big red flag. Whenever we see this, especially at the high, the probability is very high for the market to be at least close or at a reversal point. So now you know what to watch as the market is near the high and the low, so you can be prepared for the move. When the market is making high, we expect there will be more advances to push the index up. And similarly, if the market is making low, we expect there are more stock declining to push it down. So when we see divergence between the cumulative AD and the index itself, most of the time, not saying all the time, but most of the time, especially near the pivot point, the index will fall in line with the cumulative AD. And that is exactly what happened in this case with the Nasdaq 100. And it told us that we should be on the lookout for a pullback in the near term, and which we got after a little bit of a pump and dump. We got a little pump on Monday prior to the Fed meeting. Then after the Fed meeting, we got the dump on the following day. And looking at this tweak here that I put out, and the up-down volume ratio was minus 91, right near the close on Thursday at 12:52, which is 3:52 New York time, and it's minus 91. There were 91 time down volume for every up volume, right? So that is very negative. I can't recall in the recent year that I have seen a up-down volume this low at minus 91. Okay, so that tells me there are a lot of excess bullishness have been wiped out by this dump, this sell-off on Thursday. So now we essentially need to find some new ground to build a new base for the next leg up. So, and with the put-call ratio near 1, and like on Thursday after the close, I posted, and the put-call ratio was sitting at 0.92. So there's still a lot of fear in the market, and the near-term risk is on the upside. So I'll be watching these trend line for potential support, and this level here, 29.34, for clues, and see where the price might be headed in the near term. Certainly, if there are more downside, then we're basically looking at this round number somewhere around the 2,800, and if that doesn't hold, then the next level will be near the 2,700. If the market be able to build a little bit consolidation here, then push us up, then we could see this gap get filled and work itself back up toward the next gap level somewhere around 32.59.81. I hope you find the content in this video informative. Share your thought and comment on the market in the comment section below, and share this video. Thank you for watching. Good luck and stay safe.